Well, folks, LA here. This is the weekly report. I'm doing it on the 20th for the 19th. And last week we saw this market sell off and sell off hard, especially NDX and NASDAQ. Mega caps getting hit hard, slammed again. That's 2 weeks in a row now. We saw it start last Thursday, and we saw it again this week, a couple days in a row. That kind of crystallizes that range consolidation that we thought was going to take place. We've been talking about that for, I don't know, 3-4 weeks now. Bitcoin got a nice bump elsewhere, some, mixed numbers. Let's run through the technicals. If we look at the mega caps, right, huge sell-off, right? These guys have gotten hit. They've gotten hit hard. Nvidia down 8.75. You just go across the board, pretty big losses across all of these, and these guys are all heavily weighted. That three-legged force that's been driving this market higher, in particular the semis, the technology and communications, where we saw huge losses there, and that's of course what's weighing down the indexes, is why the indexes can't move, even though you're seeing other things go up, which we'll look at here in a second. And I hope that you heeded the warning from last week, where I said, if you've been riding this technology bull, you better bring those stops up, or you ought to take some profits, at least some partials. So where did the money go that was coming out of those megas? Well, we saw it go elsewhere. We saw all of these rise. So you've got this bifurcation that used to be just mega caps going up. Now you've got mega caps just going down, and the money going into other things. Now, if you consider the fact that these areas aren't nearly as large, if you will, as the mega caps, that also means that that money is going somewhere else. And where is that? Well, I expect that is into cash, into bonds. If we can see it move into the Russell, but then again it sold the Russell right back off. You left this ugly bar. I suspect these retest regens will probably hold it and try to keep it up. That will be part of the bounce that comes in. But this is not particularly a place that I would be buying. If you could get follow through and keep it, that's one thing, but you didn't do that, and so to me, that's not a place that I would want to be playing. Unless you're a quick flipper and you're good at it, that's just not a place to go. What did take a big push to the top side? ITB. Actually didn't put IBB in here. The biotechs, they were up fairly decent, but those were the two big gainers. You can see this one making a big spike up. Notice that everything now is fairly well correlated in the same price point, which is kind of interesting. But you had the SOX and of course the XLK losing it big time. Now, I keep this trend breadth as what we look at. Other people do, high lows, things like that. I think the best thing you can look at is what's the trend. And if the trends are all confirming that price, so price is moving up and trend is moving up, that's what you want to see. But look at this spike and then spike back down. What causes that? Well, that's those mega caps, right? They all broke on the 17th, and they broke lower, or a lot of them did. And that weighting took this from 65% down to 48 or so. And so that is why the major indexes are still going down, while you got the Russell going up and you got these other sectors going up. Because these other things, they don't weigh nearly as much as the mega caps. And just as I said, a lot of that money's probably moving into cash and bonds. If you get rid of the weighting, you can see the huge difference, right? I mean, these numbers are up around 650 stocks out of the 1,000. This is based on the top 1,000. And there are 650 of them that are now bullish trends. Whereas, not but 2 weeks ago, it was 350. So you almost double it, 80% in 2 weeks. And that's why we say, hey, there was rotation that took place. On the weekly bullish weighted, right, we still have problems. And the problems I've been talking about, and I'll re-emphasize one more time, is we used to have this many trend weighted breadth that were bullish, and now we have this many. So we have fewer bullish trends to the top side. At the same time, price has been moving higher, and that's this blue line. So blue line's been moving up, but you can't confirm it, right? That's negative divergence. That's a problem. And that problem is going to come to bite this market at some point. And I'll show you when. That has to do with MTTFs. Mean time to failure. How long does a trend last? We know what those signatures look like. And if we can project, therefore, how long they should last and when they should try and turn. If you look on the daily time frame, August, September is the bulk of them. A few of them here at the end of July, and some of them already should change. And so basically all of these need to turn over. Well, what trends are they? Well, the vast majority are bullish. A few sideways, and then one bearish. Go to the weeklies. When do they have to switch? Or when should they start to try and switch? September to August. Folks, the trends are telling us, the MTTFs are telling us that this market is quote-unquote extended in trend. What are those trends? Bullish. What does that mean? You got to break a swing point low. What does that mean? That means the market has to come down more. And I suspect that's what we're going to see. Here's the differences from last week, once more emphasizing money went into everything but the XLK and the NDX. Okay, let's look at the indexes themselves. So they collapsed off that move here last week, right? So 3 straight days down, almost into the support zone now that you see on the THD charts. And if we look at where support could be, in other words, if we're going to get a range, that means you got a top up here. Where's the bottom? Well, it could be in this area here where the swing point low is, maybe down in this gap area, or all the way back to that swing point high. So as low as 53.40, and of course the highs. Remember last week I noted that there was a possibility that this thing would spike up and take out that last ABCD structure. It was the last one up there that was near. We've got some larger ones longer term, but on the daily that was the only one left. Well, that's exactly what it did. Went up there and grabbed it and then sold off. The NASDAQ's already gotten a break on the daily trend. It's going after the next one. It's a little bit farther down, but that's where it's going. Where could it go? Well, it could go as far as this support line, I would expect. And so that's kind of a number there, which is around 17,000. If you look at the NDX around 19,000, which is this area down here with the green. I expect that these daily ranges eventually are going to end up creating weekly ranges. Now that's my next thesis. We already were saying that we're going to get ranges on the daily, and we expected that, and that's kind of what has happened now. And we've been saying that for about 3 weeks. What we want to look at now is what's next, right? You always got to be thinking about what's coming next, and I think these dailies are going to bleed into the weeklies. And so rather than getting that V-shaped bounce that we always see, I suspect this thing's going to roll back over. It's going to fail to make a new high, and that rollover is going to cause a bigger move down, which is going to bleed into the intermediate term time frames. What would that look like? Well, that's these numbers that we just talked about, right? Anywhere from about 5.5 to 7 and 9% of the Russell to the downside. And so that's from where we are. So in other words, it would be in the double digits for most of these. Okay, fundamental factors. You know, there was a lot of, not a lot, but there was a decent amount of news last week. None of this really moved the market. All of this was pretty much discounted. What moved the market was just the movement, the reverse FOMO, fear of missing out turned to fear of getting out, and everybody was dumping those things. What do we got coming up here? Core PCE prices, the quarter-over-quarter GDP are out. We got some PMIs and global nature, durable goods. All of these things could move stuff. We may see some big cap tech earnings that move the market. Maybe they create the bounce that gives way. Okay, bottom line here, for months now, August, September, we've outlined it and say, hey, that's a problem time. We're getting there now, and now we've got the problems. There's a massive rotation of tech going elsewhere, probably cash and bonds for the most part. Still, there's not any worries in my mind about an imminent crash, right? More than likely, that's not what's going to happen, right? It's just no structure for it. You need a structure, and I've talked about this elsewhere, and maybe one of these days I'll do it again, but basically you need a structure to get a crash, and we don't have it. It could morph into that, right? Anything can happen, and so we, you get a bounce, you come back down, and then you morph into something, and you get the swing point lows lining up so that you can get a faster move to the downside. But that structure's just not there yet. The odds still favor, and you always have to assume that you're going to go higher once you consolidate. You just have to assume it's consolidation, not distribution. In other words, it's not a top, and that eventually you go higher. And so you have to run with that as the primary thesis until you get evidence that that's not true. And so the thesis we've had is that a range consolidation build-up is coming. That's played out. Now the thesis is maybe it's going to be an intermediate term time frame, in other words, a weekly time frame, that we see this range build out take place on, and we'll have to see if that starts to develop. Okay, I usually look at an interesting tidbit. It's kind of hard not to look at the impact of the assassination attempt on Trump. But before I go into that, I actually ran across this today from a person I respect. And he says the long gunman narrative is just bunk. And he uses analysis of various audio in terms of the way the bullets were fired and the sound of the bullets and so forth. And if true, and I suspect he's probably right, that potentially could be a problem. It could be a problem for a lot of things. So that would say that you had, some sort of a planned plot, not some long gunman deranged. And that's a very different thing than what's been told so far. Okay, moving to what I was going to talk about, which is I'm reading a lot of comments about Trump's a changed man, right? Because, he came near death, it changed him. Maybe so, right? I don't know. So I tune into his acceptance speech. I don't really listen to him a lot because he's kind of a pain to listen to from my point of view. And he still seemed quite vain. But he was less confrontational, right? But the problem I have is that, this is an older guy. I know for myself, it's hard to change. Maybe you can, but you got lifelong tendencies, and to suddenly change those, that's not easy to do. And I expect that's not going to be easy for him to do because he had very strong tendencies. And so I suspect that's probably not going to be the case, and more than likely you're going to see the same old Trump that you saw before once he takes power, assuming he wins, which it looks like he will. And speaking of that, what impact does it have on the markets? Well, if he had been actually assassinated, it would have had a very negative impact. But he wasn't, right? And so now the question is like, okay, how does the market take the probabilities of him winning? Well, I think the market already discounted that, right? Market quickly reflects what's going to happen. Somehow this market always knows what's coming. And so I suspect for the most part, that's already priced in, so I wouldn't be banking on that for anything. Okay, portfolio clicking around 10% so far on the year. Here's things that we did. I want to focus on what we want to do, and that is in the coming days here, I suspect that what we're going to see is we're going to see opportunities. And we did see that with that one mega cap that we took right here on Friday on the CrowdStrike. There's going to be opportunities, and what I mean by that is you're going to see this market stretch and stretch and stretch, and you're going to want to try to find a place down here somewhere when you get some sort of a little bottom top type action to take a position and take a position long, and you go into things that you're not going to get hurt on. You just find good stocks, whether you go into the mega caps, because eventually mega caps are going to get bought again. Wherever you want to go, right? And you take a position, and you try to time it as best you can, and you're playing that range, because when you have a range, especially if the range is wide, let's just say it ends up being 10-15%. Well, if you take a large size position on a short and you can cover down here somewhere, or you buy it and you can cover up here somewhere. Well, let's just say you get half of this, right? You're taking 5% on a short period of time. Let's say you take 10% of your portfolio and do that. It's pretty good money. I think that's where the trades are going to be. When you have a range, right, everything just tends to do this, right? You don't have hardly anything breaking out and going one way or the other unless they're horrible or they're just excellent. Most of the time they're going to get sucked right back in to the range, right? Because that's where most of the power is. You know, that's where all the sucking sound is, if you will. And so you can't trade directionally when it's a range, and I think that's where we're at. I'm 63% invested. I've raised cash over the last 3-4 weeks, and we're in a position to take advantage of things as they unfold, and I think that's what we should be doing. Here's the weekly projections. You can read the numbers here. I think that more than likely you're going to see a little bit more to the downside, maybe break a swing point low, and then you get the retest regen, which will probably get above it, go back up, and then potentially that failed bounce that bleeds into that August-September time frame where the MTTFs are telling us we got problems. Folks, that's it. Have a great one. Stay safe. I'll see you next time.